Hello and welcome. I'm the Unemployed Value Degen. I'm joined here today with Mitch and Colin. The whole gang is here. We're going to think a little bit about the Trump trades ahead of us, what's happened so far, what the market's pricing in, and maybe what the market's missing. Also, tax loss harvesting into the end of the year and the January rotation effect. Mitch, how are you doing today?
I'm doing great. Thanks again for having me.
It's always a pleasure. Colin, how are you?
I'm doing great, Coach. It's great to be here. Happy to be on board.
All right. It's really good to have you both here at the same time. I know your schedules are busy, especially during earnings season. I've got the 10-year Treasury pulled up, and the market was getting very nervous over the last month, wondering if it was really going to start reversing and behave well into this channel. And it looks like it is. It looks like it started trending back down, and it might still stay in this channel a while longer. I don't know if that's till 2027, but I was getting pretty nervous. I didn't know if we'd have falling interest rates, and especially we have. Let me pull up Trueflation. I mean the old thought process is, people are going to have to get compensated for the inflation rate. So you think about the real yield you're getting on these 10-year treasuries. Inflation's, prices have been going up, and now you've got the 10-year treasury going down, so real yields are falling. So what are you guys' thoughts? How long do you think this can go on? Do you think we're going to stay in this well-behaved channel, or is it going to be higher for longer?
Yeah, I think it could possibly be, some sort of combination of the both, of higher for longer and moving in this downwards channel. Like you were saying, it was not a good sign that, once Trump got into office and rates were cut, that the 10-year shot up. That was a little scary, right? But as you pointed out with the channel, it is starting to form these, higher, lower highs. So I'm pretty glad to see the price action to the treasuries. Inflation going up, I think that's going to be a continued trend. And hopefully, the Treasury can continue to, work on this channel. It might, stay elevated. It might be a more a longer channel, but we'll see. It's going to be interesting to watch.
Yeah, I was getting pretty pessimistic about interest rates, and then Trump came out and tweeted that he is going to threaten the BRICS countries with tariffs if they don't start buying U.S. Treasuries again. And I'm kind of shocked because we haven't. I think the last president in U.S. history that would just use threats to get his way was Teddy Roosevelt, who speaks softly but carries a big stick. And I really think now Trump is going to go, one, to the BRICS, but more importantly to all of our allies, to go to Australia and Canada and Europe and the UK and Germany and say, hey, if you don't buy our treasuries, there's going to be consequences. And I think he might just single-handedly be able to bully the 10-year treasury down to 3%. And I mean, I don't think that's it's not very nice of him. But also, if we get down to a 3% 10-year treasury, and that makes a 5 or a 5.5% 30-year mortgage, I think it's off to the races. I think you're going to see a huge amount of economic activity pick up. Housing refinances, home equity lines of credit. So getting a 30-year mortgage down to 5.5, the 5.5 range, I think is going to be wild to watch. But Colin, what are people talking about in your neighborhood about treasury rates?
I would love to jump in on that point you were just making towards the end there with and kind of encapsulate that also with the higher for longer narrative. But that's really what we were seeing with the Trump trade, what will be happening with the treasury markets. And now that we have the victory in, it's kind of, the idea is locked in that Trump will be here. Now it's really about what can he do, what will he do to push around rates. Given just the velocity of money these days, and just how expensive things have gotten, how we've, kind of manipulated these things in the past with our power as a a hegemon with the dollar. I think 3% as a prevailing rate is very foreseeable, to commiserate all that, aforementioned stuff, as well as I don't think Jay Powell is quite as partisan as people are trying to make him seem. Obviously, he pretends not to be because you got to be, playing both sides of that coin when you're in that position. But I really don't see Trump being able to push him around as much as people think he will, or even have to. I don't think he'll have to. I think when interests align, as they seem to be, I see the interest rates coming down. Now, down how far? This channel that you got put up there, that's kind of what I'm foreseeing for the next year or so.
Yeah. Well,
Definitely within that, but definitely not too far below it.
yeah, so there's a lot of thought to put into what Trump can accomplish by himself, and then if Congress goes along with him, and also if the Fed goes along with him. And what's really interesting is Janet Yellen kind of pioneered this world where you can just do as much as you want at the overnight rate, and the Fed will buy it all, but limit the amount of long-term debt so that you can keep the price of it. Because, I mean, if we were doing all of our deficit in 30-year bonds, interest rates would be much higher. But this, just stuffing all of it overnight into the Fed funds rate and just having the Fed remit the profits back to the Treasury, well, that was quite a trick Janet Yellen came up with. I mean, I don't think it's good. I don't think that's the way the monetary system should be working. But I think the odds are really good that if the new Treasury Secretary, Bessent, whatever his name is, if he continues Yellen's policy of doing mostly overnight issuance, and I think they can kind of, even if Jerome Powell doesn't want to help, even if he doesn't do yield curve control, if he doesn't do quantitative easing, I think they can get a 3% 10-year. And I know Trump wants it because he's a real estate guy and he knows how important that is to the real estate market. So I know Trump wants it. I know he's trying to get it. I'm starting to think he can get it. And that's an interesting world to be looking at a 3% 10-year next year, which is just going to be wild.
I think regardless of how he looks to get the Treasury down, inflation is going to be soaring.
Yeah.
Well, agreed, certainly. Yeah, I was also just looking at that CPI, from a historical standpoint right before the call, and it's kind of eerie how similar you could draw, a little projection of what it would look like if we have another 70s scenario. We've already got that initial shock the past few years where it went up and now it came back down. We're all sitting tight thinking, okay, Trump's in office, maybe it ain't going to get crazy, but that CPI could very quickly curl right back up and, just kind of put on a 70s kind of show.
Well, we had, the true-flation up here at 11.6%. But I want to push back against that a little bit because the 1970s were rough. They were rough for the stock market. But we had the money printing. We had Johnson's guns and butter, the Vietnam War, and the Great Society. But we also had the oil shock. And parsing out how much of all those inflation waves was due to the oil shock and how much was due to the money printing. And now this 11.6% wave, that's also from the lockdowns. You're taking away the supply of goods while you're also printing the money. I think we're going to be printing money for a while, but I don't see another lockdown and I don't see an oil shock. So I don't know if we're going to get 8, 12, 14% inflation. I think there will be another wave. But it doesn't have to be a 12 or 14% annualized inflation rate wave before it has a dramatic tailwind effect on real assets, on property, on things that are leveraged. But I think inflation it's not going to average 2% for the next 5 years. I don't think anybody believes inflation is going to average 2% for the next 5 years. But I don't know if we're going to see 8, 10, 12, 14. I think my inflation case would be maybe a couple years from now, if we hit that 3% 10-year, if we hit a 5% or 5.5% 30-year mortgage, and people start doing some home equity lines of credit, people start doing some refinancing, maybe some cash out refinancing, you have, so not just the Trump tax cuts, but Trump's accelerated depreciation, where businesses want to deploy capital fast if they can get accelerated depreciation. You could have a big surge in economic activity, and the labor market is still tight. So I think we could have some high inflation. I don't know what part of the Trump administration is going to show up, but yeah, I think if we do see a 3% 10-year Treasury, I think inflation will be what takes it away. So I don't expect the interest rate to be low for Trump's whole term, but for a little bit at least. Let me move on to the dollar because I put out a trade alert for my subscribers last week when the dollar index started falling, because this channel is a little bit more horizontal. But it looked like we might be breaking out of the trend line, right? The dollar was strengthening, and then it just pulled back and gave some back. And I don't know if it's going to follow this pattern. I don't know if it's going to stay in this channel, or if we're going to have just this short-term weakness in the dollar. I had assumed Trump was going to pursue a weak dollar policy because he wants blue-collar wages to go up, and traditionally the way you get blue-collar wages to go up is you have a weak dollar, and then you focus on exports. But I'm not so convinced that's going to happen anymore, because I think you can get wages to go up with, productivity, and as far as the immigration, I don't think he's going to like round up 10 million people and kick them out of the country. So they're going to, round up the million or so that have criminal convictions in their own country, and then maybe in a regulatory fashion make it uncomfortable to be here so that people go home on their own, right? So cut off food stamps and things like that. To people that aren't citizens of the country, save a couple $100 billion a year. So if Trump can get wages up through productivity gains, because we have a tight labor market, and with some people self-deporting after benefits get cut off, I don't know if we're going to pursue a weak dollar policy. You guys hearing anything from the heads of strategy at your institutions about, is this, are we looking forward to a weak dollar regime or a strong dollar regime?
So I've heard more towards a strong dollar and weak international. So now I'm not, fully informed enough with international markets really to make a great judgment call on this, but I personally am not too, excited about international opportunities right now. I'm more so looking to be domestic.
Yeah, well, that's how I phrased it last Friday. Was that at least for a couple month swing trade, it should be pretty good. But as far as whether this is going to be a multi-year trend, I might be a year or two early, because I still think the commodity super cycle is happening. Right, once we get that, so the last 4 years under Biden, the GDP numbers have been strong, but it's all been through government spending, and government spending is a lot of services, not very commodity based. If Trump with accelerated depreciation actually gets industry moving, then it becomes commodity based. Then the raw materials and the inputs get some serious demand. And internationally, the emerging markets, they're heavily commodity dependent. So strong commodity prices are strong foreign currencies for places like Brazil and Argentina and things like that. So that might be a couple years into the Trump administration. So I think it might fall to the bottom of this channel, and or maybe halfway down the channel and bounce back and break out. We really might be seeing a strong dollar policy, especially, and I think that changes all this for me is seeing Trump say that he's going to just essentially bully the rest of the world into buying treasuries, and that he's going to make prioritize that. And I think he might actually be successful at it. So,
And frankly, that's the chatter I've been hearing, kind of put into fewer words, really that he has that ability to be using those levers, just kind of making other countries per se, other leaders do his bidding when it comes to that. Yeah,
yeah,
I mean, you already saw with Trudeau coming down to Florida not too long ago, to visit him in Mar-a-Lago, I think this week. It was just on the tape. So, he has those abilities from what I'm hearing. We've already seen the moves in the currencies to kind of support that. It's really like, will it continue? Will it sustain? Our investors going to kind of like take their win and pull out of these trades, these Trump trades in the currencies.
yeah,
The strong dollar, it's here. Will it stay? I kind of am agreeing with you on that point of it's going to fall into the channel a little bit, then maybe come back and break out. That is really just going to come down to waiting to see for Trump to be in office, waiting to see how aggressive he's willing to be. Now that he doesn't have to worry about reelection, it just takes so many things that may have been previously off the table, just for whatever reason politically, and just kind of puts them back on the table as far as tools he has to, use against other nations per se.
yeah. Well,
I think over the long term, the commodity part of that thesis is, at best a few years away. That would be
yeah,
something that, would definitely be further along into his election to see the impact.
yeah. It could be a couple years out before. So the accelerated depreciation causes the surge in industry, but it'll take a while to burn through a lot of the stockpiles, especially with platinum. I've heard that there might be even if we got back up to the old car production numbers, there might even be a whole year's worth of stockpile before the price is going to respond. But just back to the strong dollar versus weak dollar and international, some of these countries are trading so far below their historical multiples. So there's another hedge fund manager recently put out a for Thanksgiving, because the country was Turkey. Turkey's trading at 2.5 standard deviations below their 20-year average at an average price to earnings ratio of 4.
Wow.
Which is, it's just hard to resist. But I'd be punting because I don't know anything about Turkey. But Greece is incredibly cheap, but that's because the Greek stocks are all shipping companies. Shipping companies have been over earning with the Houthis blowing up ships, and then the risk that when those supply chains normalize, the day rates are going to fall. So shipping companies are something I want to talk about a little later. But Mexico is interesting because it's historically cheap to itself, and it gets piped natural gas from the Permian Basin. So they're going to have cheap electricity. They're historically cheap, and they're a huge trading partner with the U.S. They have a socialist president, but I think there's only so much. And they're also about to get maybe some cartel influence eradicated. Talking about Trump sending special forces into Mexico and eliminating cartels. So Mexico is kind of interesting, but maybe I can drop the international for a while, aside from the swing trade. Maybe it's a 2-month swing trade, but I'm a couple years early on the international markets. But I think at some point we'll get to the point where the Trump honeymoon is over, and maybe it's 2026 or 2027, but some problems start arising from the way he's been going about doing things. Maybe that's when it's time to look at international again. What do you guys think about that, Mitch?
Yeah, I think maybe holding off a little bit and getting some confirmation on which international, industries as well as, locations are going to be doing well. But doing anything right now just kind of feels like a punt.
Well, the good news is I have this strong home country bias, so I have very, very little internationally. I do have maybe more on materials. Colin, what do you think?
Far as equities wise international, I've seen the activity I've kind of been hearing about, seeing about. It's been mainly, scattered obviously, but mainly just kind of like a get out of China, get into Europe. As far as those countries where he's a little bit more antagonistic, like say Mexico, Canada, yada yada, a lot less hands-on, a lot less people are willing to touch that stuff right now just because it's a wait and see kind of thing. Because
Mm.
at the moment he's still not in office. It's a lot of talk, a lot of positioning what will actually happen once it gets there. And again, like you said, 2, 3 years down the road, how much steam is he going to have to be doing these things? How much, influence will he gain or lose, through the actions in his first, the first bit of his term?
So
So, Europe, I'm seeing people get into though, just generally, broadly.
I have heard people mention Europe as a good contrarian trade. And if you look at some of these cheap countries, you've got Spain is about a standard deviation and a half below its long run average. Austria, similar to PE of 8. What I don't like about Europe is the luxury brands. When China gets nationalistic, they are willing to stop buying foreign stuff. And so all the luxury brands that rely on China as an export market could be in trouble. And places like Germany have expensive electricity. Now, Poland, that's almost 2 full standard deviations below its 20-year average. Poland is it's like an Asian tiger of Europe. I mean, Poland's done what South Korea did. In 25 years, they brought their quality of life up to the level of, I think, per capita, they're now equal to Japan. It's just insane what Poland has done, and their market is cheap. And also electricity-wise, even though they have the EU breathing down their neck, they're still willing to burn coal and have cheap electricity. So I would be willing to give Poland a really hard look. I've tried to look at some of their stocks, and I haven't found the right one to write about. I've actually found a couple, maybe an interesting ETF. I haven't written about any single sector ETFs, but there's a really interesting one for Poland. I think it's an actively managed fund for the entire Eastern Europe region, but it's 70% Poland, and it has some other characteristics too. But that might be a place where I'd be interesting to go fishing. What do you guys think about Europe?
Very
Um,
geopolitical, very geopolitical. It's kind of case by case, in my opinion. As far as Trump goes, he's not too antagonistic as, with some countries a little closer. But on that Poland point, you know, uh, when you're over in Eastern Europe, there's a little bit more uncertainty still, even, all these years later after the war began. It's still kind of tense as far as like, how much people are willing to invest because they don't know, what kind of escalations are still possible, what kind of different things could be happening over there. But as far as like money on the sidelines goes, people have lined up in countries like Poland, getting ready to get back in, back into that Eastern Europe, Ukraine area where things have kind of been torn apart a bit. And, the money's on the sidelines. It's there. It's definitely there.
Yeah. Mitch?
Yeah, I don't have too much to say on this one.
All right, it's all good. Let's look at some charts. So that'll get Mitch excited again. So S&P 500, right, when the 10-year was making new highs, right, the S&P was struggling, and now that the 10-year is falling, the S&P is ripping, but not anything like the equal weighted S&P 500. So check out where the S&P 500 is compared to its last high, and then check out the equal weighted. And the equal weighted is breaking out to new highs, and the market cap weighted isn't, because it's large cap tech that's dragging everything down. Look at that NASDAQ.
Right. The Mag 7 is starting to slow down a bit, and everything else is getting looked at for once. AI's starting to not take all the oxygen out of the room again. So I think there's a lot of interesting opportunities. It's definitely seeming like a risk on market. Especially, look at how Bitcoin's been doing, and the positive interest rate movement, I think, is very beneficial for a lot of these non-Mag 7 companies.
The criticism about value has always been that it outperforms, but it outperforms when the market's going down. So who cares? Because it outperforms and you're still losing money. Is it possible to have a glorious rotation where money can move out of the Mag 7 and into other things without the market crashing 10, 15, 20%?
It's tough to say because of indexes and ETFs. They're so heavily weighted towards the top. So I think especially like a drag on NVIDIA would more than likely drag down the rest of the market.
Yeah.
But things that are uncorrelated, maybe some of the small cap names we look at, might be less affected than others, but in a crash, correlation goes to 1.
Yeah.
But that chart looks a lot more similar to the equal weight S&P that you showed.
Yeah. Well, the one of the problems with the Russell 2000 is it has so many biotech stocks, and the market doesn't know what to make out of Trump's biotech position, because you have RFK Jr. who wants to rain fire and brimstone on some of the large biotech companies and the pharmaceutical companies. But you have Vivek, who is a biotech startup founder who wants to streamline FDA approval. So I don't think the market knows what to do about healthcare right now. What is the...
I think expedited FDA approval will definitely benefit smaller biotech, but I think that some of the larger cap names are going to have more disruption.
Yeah, so right now nobody wants to buy Pfizer, I think for good reason. But if you have a kind of a cynical view that nothing ever happens, then that would be the contrarian thing, would be to buy the large cap healthcare. I have some of the sector.
AstraZeneca, you could get a real deal on AstraZeneca right now. So if that was like your view, that's the one I'd be picking as far as discounts go.
AstraZeneca, what's the symbol on that?
AZN.
Yeah, I'm not too interested in
they got a
anything in
couple.
that space.
Yeah, so the story here was, obviously AstraZeneca is a giant medical company. They always got a lot of business in China, and China's always got some shady stuff going on, whether or not you're big or small. So that was really the story, something broke, China fraud, whether it was in the past or how recent, I'm not too familiar. But long story short, it crumbled very quickly. And a lot of people are seeing this as a pickup, just something to buy cheap, like a blue stock to put away, save for later.
Yeah, I see that action there.
Yeah, the thing with AstraZeneca, they got a couple names for it. It's either AstraZeneca or FastraZeneca, because it's so good at going up and down rapidly
Yeah.
compared to other things of its size.
Well, that's not a turnoff for me, because I have Degen in my name. So volatility can be your friend if you're good at timing, which I have not always been good at timing, which is why I call it Mitch and ask about the technicals. But
Yeah, but I mean, yeah, you just saw with that screen there how weird the lines reacted to that. So definitely, it's a technical point right here to trade on.
this isn't exactly since the election, because I have the 1 month pulled up for sector performance, but it's close enough to overlapping what's happened since the election. About a month or two ago, I started writing about consumer discretionary names based on you guys were there for the sector rotation phone call. That consumer discretionary had underperformed all year, and usually doesn't have two bad years in a row because it used to be called consumer cyclical, right? It has a bad year, it has a good year. And since the election, consumer discretionary is up 11%, which is wild. Financials up almost 9%. Industrials are doing well. Energy has caught a little bit of a bounce, even though energy's been a dog for 2 years.
I'd be interested to see what in energy has been bouncing because I'm not sure how broad-based that is.
Definitely been nat gas and definitely been nat gas. Not so much gasoline, but definitely nat gas. They've been having a hell of a year.
Well, energy for this subsector, the way Fidelity does it, they only have two subcomponents, and it's services and then it's energy. But the services have been dramatically outperforming, which we've seen with one of my favorite stocks that I hope doesn't get taken private, even though that rumor is floating. But look at ACDC since November 5th, since the election. It's up from 650 to 9. It's just been ripping higher. Which it deserves because it's a good company. But drill, baby, drill. I don't think anybody knows what's going to happen to the oil price. But whatever happens to the oil price, it's oil services are going to benefit. There's one view where if Trump shuts down Venezuela and Iran and takes those barrels off the market, and also there's a demand pull because you have more economic activity from the accelerated depreciation and capital getting deployed, oil prices could go up under Trump. Even though I think, even though shale oil is short cycle, it still takes some time to bring online. The demand can go up faster than the supply can go up. So if you have Iran and Venezuela taken offline quickly, some economic activity starting to accelerate in January, oil prices could rise rather than fall under Trump. But whatever happens to oil prices, I think everybody agrees oil field services should be rocketing. And then the big laggard for that is offshore. So ACDC is doing amazing. Transocean, nothing. And Trump specifically mentioned the Gulf of Mexico for drill, baby, drill. Right? So all it would take is one new drilling program in the Gulf of Mexico. I mean, one more demand for a drill ship there would have a huge impact on the entire market because there's so few drill ships. So onshore oil services is rocketing. Offshore is struggling. This might be because of tax loss harvesting. Transocean is big enough and it has enough professional attention that this could be professional tax loss harvesting suppressing the price. And you might see this thing just bounce back hard in January.
Yeah, I would love to see that, but it looks like it's consolidating here. Probably some more, consolidation before any sort of breakout. And with ACDC, it was kind of the opposite. It looked like that was getting a little bit too hot. It's got that triple top forming in that area, back in June, and then in August again, it topped out around, call it 9.6, 9.5, whatever. And your RSI is getting hot. I mean, this is a pretty good looking rally since late October, right? You've got the higher highs and lows, but short term, this looks like it could pull back a bit, but that doesn't mean it won't continue the uptrend, but you probably could get it at a cheaper price than, where it is right now.
Yeah, so I mean, it might pull back next week, but in the months ahead, this one has pretty good chances because it is, I think it's a well-known Trump trade. I think this is a consensus Trump trade. So I think money's going to flow into it. But we'll have to see. But yeah, so Transocean, the technicals say it might chop sideways for a while.
But speaking of nat gas, how has you got VET and New Fortress? How have they been doing?
Oh, well, we have to look at New Fortress's chart because it started breaking out. It's from its consolidation period here around 8 and 9, and it started getting some positive momentum.
Yeah, I would love to see them hold above that 50-day. It is at the top of its Bollinger Band, so it might, bounce back to the 50-day. But if it holds, this could, possibly be the turnaround that, we've been waiting on.
Yeah, and tax loss harvesting season starts in October, so mutual funds, I think mutual funds end their calendar year in October. Is that right? So tax loss harvesting starts earlier than I always think it does. So I don't know how much of this, this might have been fundamentally due for a bounce, but staying down because of the tax loss selling. Or maybe there's tax loss selling ahead of it into December. I don't know. But the last earnings call showed a sequential improvement, which is what the quantitative strategies want to see. And also, they have all these fixed contracts for volume for deliveries, but they also have fixed contracts for buying. And they're currently in the process of trying to increase the capacity of their liquefaction facility. So they're bringing cargoes to Europe to sell at market prices. And the market prices have been high in Europe. And along that market prices being high in Europe is Vermillion Energy, which it's just been an ugly stock to hold for so long. But that, I think, is starting to get a little bit of attention too with the weather situation. So, I mean, understanding the market's hard enough. Understanding weather, I don't even want to attempt it. But we had 2 unreasonably or unseasonably warm winters in Europe, and so I think the meteorologists are saying that this winter is supposed to be average or colder than average, and that's kind of what Vermilion Energy has been waiting on.
How much of it is just the effect of global warming? Like, how many record cold winters are we going to continue to get? I'm a little worried about that.
Well, that's what that's what the haters against Vermilion has been saying. Like, oh well, maybe this isn't an unseasonably warm winter. Maybe this is just global warming. But I think global warming is taking place on a scale of like 100 years. So sometime over the next 100 years, you're going to have a colder winter than average or 2. And the Dutch TTF natural gas prices and also the futures. So the futures are showing expensive natural gas all the way out to July, which means the consensus is Europe is going to have a hard time refilling its stockpiles because they're going to deplete a lot of natural gas this winter. So if Vermilion can lock in some nice hedges and have some fixed natural gas prices going out a couple of years at high rates, I think it would be good for them. I mean, this is a company that does about $1 billion of operating cash flow a year, and their market cap's $1.6 billion. It's just outrageous to be that cheap, but then it just keeps on getting cheaper.
Yeah, and the stock has now 3 times in the last year failed to hold above the 200. It's just not looking great for the stock price.
So from a technical point of view, when you see this part, and this part, that every time it goes above the 200-day moving average and then falls back below it, that means that the sellers have control, right? The buyers
kind of means that
control.
the rally is not sustaining, right? So that's a little bit of a negative sign for me, but I mean, it could bounce off that 50-day moving average and make another attempt at it. Not to say both things couldn't happen.
But this could be a higher lows and higher highs beginning here, maybe. Who knows?
Yeah, it's not something I'm super eager to buy more of at this price, though.
Yeah, I'm happy to rotate out of it, especially because I finally found another oil and gas name that I liked. I'm really big on insider buying, and the weak part of Vermilion has always been management. But I finally found an oil and gas name that I like better. So when this gets some positive price action, I'm happy to rotate out of it. But also, the cold winter, after 2 warm winters, the cold winter might finally be here. And there's also some positive news. So the stock price fell from, I think, $40. Let me pull it out a few years. So it was at, what was the stock price? This is, let me go fewer years than that. Yeah, so it was in 27, 28 area. It was the windfall profits tax from Ireland that I think was really crushed the sentiment on this. I think Ireland ripped away something like $400 million, which, by the way, this company makes an operating cash flow every 6 months, so it's not like a death sentence to them. But there's a pretty decent chance that their lawsuit is going to win. There's been a couple other lawsuits against Europe's windfall profits taxes, and they're winning. And Vermillion Energy's lawsuit is better than average because their offshore platform in Ireland, they had a zero royalty contract. So the government of Ireland, back before they went ESG crazy, to stimulate that offshore development of their natural gas, they promised a zero royalty contract for the development of that platform. And so the windfall profits tax was kind of like, hey, you're taking back, your breach of contract. You promised us no royalties on this natural gas, and now you're trying to claw it back. So they might, and it probably wouldn't happen soon, but they might just have a surprise $400 million back from Ireland, or maybe Ireland would give them, income tax credits or something like that, which sometimes can be sold, so it's as good as cash anyway. But yeah, it's 2 years of warm winters. That's got to be over at some point. But we can move on. So back to the sectors. We hit energy pretty hard. Consumer discretionary, I started trying to get into a couple of months ago. Financials have always been, I've been overweight only because of competency, because I understand financials better than most other sectors. Industrials, because they're never cheap, I have a hard time buying them, but I found a few. Energy, I'm unreasonably overweight. I kind of want to think about what might the market be wrong about. We talked about healthcare, about how, yeah, you have RFK Jr. there, but you also have the Department of Government Efficiency might be looking at Medicare and Medicaid spending, but you also have Vivek, who's a biotech startup. So maybe the whole FDA approval process getting streamlined might benefit somebody. That's kind of in my too hard bucket, because we have ARS Pharmaceuticals, but I have a hard time finding biotech that I can understand. But materials down here, we talked about a little bit how materials, maybe that's a year or more away, but why would people be bearish on materials if Trump is going to do accelerated depreciation and we're going to do an industrial revolution in the country? That's that might be because there's still a lot of people out there that think China's heading into their Great Depression. Meanwhile, they've been growing their GDP at 5% a year, while everybody thinks they're going through a Great Depression. So if 5% GDP growth is a Great Depression, China could come back online at any time and be aggressive again. But there's a lot of China bears out there.
There could be some upside in materials, but not sure when that'll happen. But yeah, I definitely like materials, but we got plenty of those in the portfolio.
In the components, so construction materials have been going crazy because the home builders have been doing well, because we have this structural housing shortage. And packaging finally bounced back. I mean, we were in that RYAM name, and I think I cut it short because was not super confident. But that finally did bounce after I sold it. But packaging and construction materials have been moving, but it's chemicals and metals have been weak. And copper went from this thesis that everybody agreed with to then the price didn't behave that way in the short term, and so everybody got bearish on copper again. Now that nobody's talking about copper and metals have been underperforming, now might be the time to buy some of those copper names, because everybody agrees on the 10 or 20 year thesis. It's just it didn't happen in the last 6 months, so everybody's mad at it. What do you guys think about metals?
I'd be interested to take a look at the Hudbay mineral chart.
I can do that. I can pull it up.
Yeah, mining's definitely been a sector I've still seen interest in. It's definitely not something that's been too easy to pick out because of the Trump trade kind of idea, but there's interest there just because of commodity inflation, that kind of typical stuff. The cash flows look solid, but it's case by case.
Yeah, so this is the Hudbay mineral chart, and it's had 6 months of copper moving sideways, maybe not even just sideways, but people getting frustrated with the thesis saying, hey, I thought this was supposed to make me a bunch of money quickly, but it's a 10-year story, not a 6-month story. But one thing about Hudbay Minerals is they get a significant chunk of their profits from gold, because they have one gold mine mixed in, and copper and gold are ore deposits together, but they have one gold mine mixed in with it. And gold, I don't think people are in agreement on what gold is going to do under Trump, because on the one hand, you've got somebody who's going to, probably be good for the U.S. economic strength in the world. But on the other hand, if you're a country that's getting bullied by Trump and forced to buy treasuries, I think the natural defense to that is to buy even more gold, because you're going to be waiting for when Trump is out of office to go back to trying to replace the U.S. dollar. So I don't think gold really needs to fall much. It could move sideways, and if it moves sideways, all these miners are incredibly profitable.
I agree. I'm definitely bullish on gold, and I like Equinox.
Yeah, that's the GLD ETF just to get a gold price, and this is Equinox.
Even though that chart's pretty range bound, but I do like the setup for gold going forward for everything you just mentioned.
The
And
chart's
also
pretty.
just for inflation, knowing that inflation will be hitting the market, you got to figure gold will follow.
The chart's pretty range bound, but it has been making higher lows. And also, they should have over the next 2 quarters some positive catalysts when their Greenstone mine is at full operations, and that might even be next quarter. So, and the price has fallen back to something kind of reasonable. I don't know. I think gold and copper both are things that nobody's that interested in right now. Now, maybe that means I'm early and the price is just going to fall dramatically in the short term here. What do you think of the Hudbay Minerals chart?
Long term, it's a pretty solid uptrend, and you had a double bottom back in August and October, which is a good sign for the continuation of this. And then consolidating a little more while the copper price has gone down. So that's pretty hopeful, as long as it can stay on top of its moving averages. Once people, I've seen a whole lot of momentum. When copper's doing well, everybody loves Hudbay, and then same follows once the sentiment turns negative.
Yeah.
So it would be worth monitoring, how copper's doing before, looking to jump into this and expecting some sort of inflection. But I think at some point there will be an opportunity in it, because like you said, copper is more of a long-term type of story. It's not, in the next 6 months is it going to pop.
Yeah.
Right?
Now, Hudbay Minerals falls into the category where I like the copper thesis, and I didn't get everything that I wanted out of the business. Right? You don't have management aligned with shareholders. You don't have huge insider buying. ERO Copper, I think they're in Brazil. I had written about them once upon a time, and I didn't buy any at the time because I think I had a suspicion the price could do this. But whatever is happening in Brazil, the strength of the Brazilian currency, if you're selling an international commodity, I think that you have a lot of insulation over whatever Brazil is doing with their currency. So I might be looking. There might be other copper miners that are a better buy. What do you think of ERO Copper, even if you don't know the fundamentals?
I do not really like this chart. It looks like it's just begun to fall. This isn't something, especially coupled with, being international, and we don't know how international is going to play out. This isn't something I'm, necessarily looking to buy. And as you see, when the RSI got oversold, it didn't, it had a little bounce, but it kind of failed to really rally off that.
Okay.
It just kept falling. And you've got the death cross on the moving averages. And also the PE is still twice of Hudbay's. That's not great value to me.
Well, I have to dig in because capex happens before earnings, so you have to separate all the minors between what's growth capex and what's sustaining capex and what's. I have to do some more digging, but the quantitative strategies will go off of PE, so that's all very reasonable. But yeah, it's and they were an aggressive growth story, with a strong ownership by management, but management was giving a little bit of strong management percentage by ownership, but management was also taking chips off the table, which is reasonable behavior. It's just kind of were they taking too many chips off the table. But this might be baby thrown out with the bathwater with Brazil, but Brazil might have a lot more to fall. Speaking of Brazil having more to fall, there's PagSeguro. What do you think of PagSeguro?
That looks pretty nasty. I'm not jumping in that one quite yet.
Yeah, that's an ugly one.
Yeah, look how far away those moving averages are, and failing to hold over the. I mean, it went all the way from on top of the 50-day to the bottom of its Bollinger Band, and 2 trading days. It looks like that's a pretty aggressive move downwards.
Yeah.
Broke through that little bit of support it was creating there at like 8.25, $8. That's not something I want to buy. And yeah, this is a situation of oversold getting more oversold, which we've seen plenty of stocks cut in half after we thought they couldn't cut in half again. And
Yeah. Well, the larger, the bigger brother of PagSeguro is New Holdings, New Bank, and Warren Buffett has a pretty big stake in this, so he just trimmed it by 20%. This thing has really gotten slammed just in the last couple of weeks, just at the start of November.
yeah, but typically when a stock is on an uptrend like this and it bounces below both of its moving averages, that usually creates some sort of opportunity. So out of
Yeah.
the international companies I've seen, this looks like it might be near to bouncing.
Yeah, so just like this point here, when you're in a strong uptrend and you dip temporarily below the 200-day, that could be a buying opportunity. So
Right.
this to you looks like an attractive one. And hey, Warren
Yeah,
Buffett
and the
agrees.
RSI is getting pretty low as well.
Okay. Yeah, I did a 3-part series on Brazil fintech companies, and New Holdings was the quality growth stock. And it's just as a value investor, I find quality growth difficult. It's also on a small cap. It's a 60 billion market cap company, but the technicals are good for it. And then what else? Speaking of things that just fell below their 200-day, is Peabody Energy, right? Peabody Energy had this massive crash. So I put out a trade alert and I told everyone I sold it when it was just a little bit over 29. And because Peabody's Energy has been so well behaved in its channels, but it just crashed right back down to the 200-day on news of their acquisition.
Yeah, this looks like a buying opportunity to me, especially, with what you said, how, strong the support and resistance of those Bollinger Bands are. It's
Yeah,
consistently just going top to bottom, top to bottom. And
yeah,
you're right, to call out the sell at 29.5, where it was, top of the Bollinger Band, it was overbought. And yeah, now it completely corrected, but right now it's at 2 points of support, right? You're at the bottom of the Bollinger Band and you're at the 200-day where it's, previously reacted pretty strongly to, whether, it's, failing to rally or breaking through. It's been a
yeah,
pretty strong uh, point of resistance. So
yeah. And
I would definitely consider this one.
you would not be against buying some Peabody at the open on Monday.
Yeah.
All right, let me just see how that compares with Warrior Met Coal, who did not do an acquisition, and they're just chugging along right in the middle of their range.
And I mean, while I don't think this is as, amazing of a buying opportunity, that chart still looks really good to me.
Yeah,
Um, yeah, hanging out at the middle of that Bollinger Band. You got that a little bit of a nice recovery from that sharp run up in early November. This is, I think this could continue to move upwards. And you got the recent Golden Cross. It's not overbought or anything. This is something I like.
Okay. Yeah.
But
So
maybe not as much as BTU for the short term.
yeah, this one I want to it's just been so well behaved, and I think it's the term for this is when a stock starts behaving this way. They call it a hedge fund hotel. That there's so much professional money in there, it forces it to behave that way because they're all following the technicals. So
Yeah, right. And if everybody's following the technicals on this one, this is where everybody is expecting it to bounce.
Okay, well, hey, here's hoping it works. So I'll probably enter a position in this on Monday, and I'll probably maybe get my international stocks, maybe make some money on a swing trade, but probably wait for next year to reevaluate buying things internationally in a big way. So as far as the sectors in the Trump trade, the other one where they might be wrong is real estate has only gone up 1.5 percentage points in the last month. And meanwhile, now you have Trump going out there, beating the drum, saying that other countries have to buy our treasuries, or he's going to, bully them into it. And let me just check on the components of the sector. And you have, well, office. I'm not touching that. That's dead. But what's interesting is industrial real estate has been falling, despite the fact that we're reshoring. We're going to have accelerated depreciation. And we're going to have falling interest rates. So I think I could...
Yeah, I definitely think that's an area worth looking into.
So this might be an area where, the Trump trade consensus could be wrong, to look into some industrial REITs. What do you think, Colin?
Yeah, no, I definitely think that'd be a great opportunity to kind of hedge yourself with the Trump trade idea. Kind of look at those things like those industrial, big warehouses and whatnot, where you're expecting, hey, maybe it's going to stay vacant. Well, maybe it might not. Interest rates coming down, a lot of activity needs to take place. That'd be a great spot to hedge the Trump trade.
Well, we still have the reshoring. The reshoring thing has been ongoing, but I've been listening to the earnings calls for companies like Alta Equipment Group and Custom Truck One Source, and what they said was people were waiting for a little bit of interest rate relief because in the Inflation Reduction Act, Biden sent a bunch of money to the states, so the states have the money. The money's left the federal government. I don't believe they can claw it back. And the states have approved various solar panel building projects. So that money has been allocated to the states received the money, the states have chosen the projects, and they've even chosen the people to complete the contracts. And the people who complete the contracts, who are going to be customers of construction equipment from Alta Equipment Group, are saying, yeah, we're going to hold off to a little bit of interest rate relief and then we'll buy this equipment. And I've also heard people saying that the belief is so strong out there that Trump is going to be able to enact accelerated depreciation for the calendar year 2025. People are going to start making big capital investments in January just because they know he's going to get that done in his first year, and they know that in their 2025 taxes they're going to be able to claim that depreciation. So there's a big chance that some of these equipment companies like Alta Equipment Group, and also just the economic activity generally, could be picking up pretty hard in January. What do you think of that chart, Mitch?
Yeah, that looks pretty solid to me. It's doing everything we asked, holding above that 50-day, and when it tapped it, it bounced. So yeah, this is looking like it's starting some good momentum.
And then Custom Truck One, so this is a much smaller position. I like Alta Equipment Group better, but I did start a position in Custom Truck One Source. I mean, it just rocketed up from $3 to $6.
Yeah, this is something I probably wouldn't mind selling at this point.
Take some profits
just based on the run up.
So I didn't listen for a recent earnings call yet because it is a small position, but I just checked in on my account the other day, and what I expected to be $3 was $6, and it surprised me. But it's in the exact same market as Alta Equipment Group. It's the same business, just slightly different inventory. And it's all the same thesis that people are going to be buying this equipment. In fact, Titan Machinery, except they're half agriculture, is in the same equipment dealer parts and service business. So Titan has much less of a recovery, although it does have, that is
it has so much less torque to it than the other companies we just looked at.
yeah, although the market cap is amazingly small, but it has some pretty nice behavior there for a channel maybe.
It does look like it's having some solid uptrend.
Yeah, but they're half construction equipment and half agricultural equipment. Agricultural, Belarus came out and said that they're going to be like the OPEC of, I think it's phosphates is what they do, and they're going to restrict supply to stabilize the price. Now, CVR Partners is nitrates, not phosphates, but that recently just had a huge bump up too. So there's been a lot of movements in agricultural space, but I think for agricultural equipment, the farmers have to be making money for a couple of years. But this one had crashed ever since I wrote about it, had a huge rise over the last 2 trading days. I mean, it's almost like everything is moving. There's a meme out there that, what is it? Somebody's looking in the mirror and telling himself, you are a good stock picker. It's not just that everything is going up at the same time, which is kind of happening right now, right? Everything's going up at the same time. You're trying to make yourself feel better that all the stuff that you picked is actually the good stuff that's working, because everything's working. Anyway, what do you guys think the odds are that that's right, that there's just going to be this huge boom of activity in January because everybody plans on Trump's accelerated depreciation?
Yeah, I think it could be a big, sell the news type of situation if everybody's expecting it. I feel like more often than not, that's what ends up happening. If everybody's building in expectations, they'll try to front run it. So I'd be a little concerned that maybe, if everyone's expecting this industrial boom and reshoring, a lot of this crowding into the space could be just trying to front run that trade.
Yeah,
I agree with that wholeheartedly. Not that to say it's just priced in. That's a little too simple, but I think a lot of the return you would have seen out of something like that, it's kind of already priced in. There's a lot of premium to these ideas playing out, and there's a lot of risk for them not to play out to par. So with that being said, gotta have my hands under my feet.
Okay, so what's the conclusion from the behavior of the market from Trump trades? Is that for the most part it's not counterintuitive, right? It's consumer discretionary, it's industrial is what we thought it would be. The things that's interesting, industrial real estate, but you guys are on the position that maybe materials is more than a year away, maybe international is more than a year away, and I'm kind of of the position that healthcare is maybe the too hard bucket. So aside from Peabody Energy, which is a buy at the open on Monday, and maybe looking into industrial real estate.
There's another chart I would like to look at that I think might be a buy, and it's Cardlytics.
Oh, okay. That's a good one. Oh, I forgot to mention OpenDoor also. I'll show that chart afterwards. So Cardlytics.
Yeah, it's coming back to hanging out over the 50-day, and it's been consolidating here, and I do like, they're kind of in, communication and financials a bit with that deal with American Express. I think they're going to be well positioned, and this looks like it's, probably around as cheap of a price as you can get. I mean, if it falls, it looks like it's got a nice floor established, and this is something I wouldn't mind adding to here.
Yeah, this is something I'm happy to buy. Check out the activity on OpenDoor. It was down here at $1.50, $1.60, and it just rocketed up to $2.30 in a course of 10 days, 10 trading days. So, and this is while interest rates hadn't really started falling when this started rocketing, which I thought was kind of interesting. So I don't know if there's widespread belief that the real estate market will unfreeze, because this is kind of purely existing homes, not even new home sales. And let me see if any of the So Remax doesn't have this exact same behavior, although it's been an up channel. What is it? Anywhere Real Estate. Well, maybe that's been doing some behavior too. Doug's been moving a lot on the overthrow of their old CEO, and then yeah. So let me go back to OpenDoor.
So the OpenDoor chart looks a little to me like this might be, especially if a lot of that run up wasn't even interest rate based. I'm not necessarily convinced it's going to hold here because it failed at this level, twice before, maybe even more than that if you look a little further back.
Yeah.
But and it's getting a little overbought. And consider how the rest of the real estate sector was doing in that little quilt you were showing. So I think it's definitely going to be interest rate dependent, and right now it's interest rates are moving a little favorably, but we're still yet to see the housing market unlock, and that might take some time.
Yeah. It's a small position. My goal for OpenDoor and for Cardlytics is I want to have a 2% position in both of them because as far as the size of the market and the competitive landscape, they genuinely could be 50 baggers. And there's so few things that genuinely could be 50 baggers. I have to own it. But there's things that management does that I don't like. They're not perfect stocks by any stretch of the imagination. Portillo's. What do you think of Portillo's, Mitch?
I would hope that bottom at around 10.5 could have been the inflection point. It's been rallying a bit. It was in an uptrend and bounced, between those little between the what was I saying? It went under the two moving averages and it looks like it's bouncing. And you had that inflection in the MACD too, even though that's lagging. It looks like that's about to inflect, and the histogram, the bars are getting a lot smaller, which means a change of direction could be coming. The oversold RSI. This looks like it could be bouncing, and based on past price action, it should hopefully go above both of those moving averages and continue this rally.
So unlike some of the energy stocks and material stocks, which I am a masochist for owning, this one, when it hits the 30-day, it bounces off, as opposed to hitting the 30-day and just stay, or the RSI of 30, and then just dragging along and staying there for months at a time.
Yeah, discretionary has been doing well. So if we think that's going to continue, I think this chart could continue to recover.
All right. Well, I think we've probably hit just about an hour. I want to thank you both for coming. Anything you want to add to tax loss harvesting, January rotation, Trump trades, what the market's getting, what the market's not getting? Colin, any closing thoughts?
Make sure to max that Roth as we're coming up on your end. That's about it.
You get a couple months leeway, right? You can max out your 2000.
It goes up April, I think.
Yeah. So you can do it up until a few months into next year. So it's not totally urgent, but that is good advice. You got to max out your Roth every year. Mitch?
Just own stocks. We know there's going to be inflation, so buy yourself some stocks.
Well, that is some concern. There's some people saying that because the stock ownership, the percentage of the portfolio weight that's in stocks are at a record high, and the PEs are at a record high. So there's a lot of people out there saying that has to go back, except that people are smart and stocks go up and bonds don't. This doesn't even give the PE for the S&P 500, but I think median PE, not including the Mag 7, was at 21, which is, I think it's pretty rich, even historically. But at the same time now, if you're thinking about things that could affect the multiples, you're going to have growth, and if you're going to have sustained inflation, you get nominal growth, so the growth rate is higher. And then if you think of quality, you have so much more international exposure than ever. The stocks in the S&P 500 are higher quality and higher growth than they've ever been, so they could sustain a higher multiple, but I'm hoping for that rotation from large caps into small caps. But anyway, thank you guys for coming. and we'll catch up to do more technicals probably in a week or two. And have a good. Although Christmas is coming up, hope you had a great Thanksgiving, and hopefully we can meet up one more time before Christmas. See you guys.
Yeah, sounds good.
Of course.
Thanks for having us, Coach. See you later.